this year, we suggested looking at apartment REITs. And all three of the stocks in this slide have been hit hard this year, along with the rest of the market. As you've likely figured out, the juice likes Essex Property Trust most. Why? Because when compared to other apartment REITs, we also like Equity Residential and Avalon Bay. ESS has the most high-end West Coast market exposure. In fact, its entire portfolio sits in affluent Northern and Southern California and Seattle. These places have large pools of financially resilient residents who might not be ready or able to buy, but they're more than willing and able to, again, rent at a premium in supply-constrained expensive markets. One key thing to remember about those median rents we showed you at the outset, median means middle. A quick survey of its portfolio reveals that Essex rents its apartments for considerably more than median rent. In Essex markets, big tech continues to return to the office at some level with big investments in office space. In San Francisco and Seattle, there's a similar biotech boom happening, resulting in affluent workers looking to rent apartments. These people make good money, but it still might not be enough to buy in the cities where they live and work. In fact, it's still considerably more expensive to own a home than it is to rent in Essex portfolio cities. The story we've pieced together today indicates that Essex's long-term narrative remains intact. Essex is a dividend aristocrat, having increased its annual dividend payment for 28 consecutive years. Thanks in part to this dividend, Essex's total return crushes the specific and broad indices it's part of. One of the beauties of dividend growth investing, you get paid as the stock price ebbs and flows. The bottom line is this: investors might have unfairly punished apartment REITs, particularly relatively well-positioned Essex Property Trust, which rents to an affluent base of high-paid workers only in the West Coast's hottest markets. If you're a long-term investor, now might be the time to consider a position in Essex or double down if you're already in. One way to ride this market's waves is to set aside some cash once or twice a month to invest in Essex or any stock you like for that matter. This is called dollar cost averaging, a long-term strategy where you'll purchase fewer shares as the stock price rises and more shares when it falls.